Advisors. Ravi, great to have you back on the program. Thank you very much for your time here on CNBC TV18. Prashant this side. Ravi, I want to start with what you are really passionate about and what you really think is, a big opportunity area, renewables. And, that's the space that you've kind of focused on and got some, you recently held an event and you had lots of speakers there. So you're focused on that space. So for our viewers, tell us, what's the opportunity briefly and what are the best ways to play or get an exposure to that opportunity in terms of listed names? Go on.
Thanks for that question. See, I'll tell you, there is a big shift happening. See, humanity, since time immemorial, have been using energy. Since the first time we learned how to burn fire, after that, away from...
Ravi, actually, we're having some issue with your audio. We can't hear you very well, so we'll just come back to you in a bit. Wanted to mention a few stocks, actually, in pre-opening, or rather in opening tick. On the gaining side, by the way, the mid-cap index is now outperforming a tad bit. So on the gaining side, you have many big movers. MedPlus is one we were talking about. Cyient is up almost about 3% as well. Vodafone Idea is up about 2% post numbers. GIC is up about 2.5%. And there's a large trade that has happened in Star Health. So that stock on the downside is down almost about 5%. So keep an eye out on that. PB Fintech as well, about 2.5% equity has changed hands, so looking weak. But Ravi Dharamshi is back with us. Sorry, Ravi, we had a little bit of an issue with your audio. Go ahead.
So I was mentioning that we are moving away from fossil fuel and towards renewables. I think we have all the ingredients that is necessary to move away from carbon producing technologies and move towards renewables, which is an unlimited source of power. And the cost, the economics, regulations, technology, everything is in favor for us to make that move. And the whole world is moving in synchronized manner towards this. So this is going to be the largest trend that is going to be panning out over the next 10, 20, 30 years. So there will be a lot of opportunities that will be created. And if you get a company that is at the cusp of another mega trend that we are bullish on is the manufacturing. And manufacturing in India. This is the supply chain shift away from some of the other countries like China towards India. So if you can find a play which is at the cusp of both the trends of energy transition and manufacturing supply chain shifting to India, then those companies are likely to witness exponential growth over the next 5-10 years. And that is what makes us bullish. Having said that, I mean, as you mentioned earlier, I mean, there are not too many plays available in the listed space. But over the next couple of years, I believe a lot of companies will come to the market, whether it is solar module manufacturing companies, whether it is biofuels companies, various types of technology companies that cater to the energy transition theme will come to the market. And I think one needs to keep their eyes open for those opportunities.
Ravi, there's a lot happening on the private side as well, right? But for majority of the viewers, it's easier said than done. I mean, the listed universe is what you have easily access to. So would you be kind enough to, I mean, there are not that many opportunities, but there are. Would you want to share any ideas? Yeah.
So we have discussed some companies in the past, and I mean, with all the disclaimers that we own and, we are likely to, we can buy or sell at any point of time. Please take it with a pinch of salt. But there's a company called Praj Industries that we have discussed in the past, and you were just discussing about the results a while back, and management is also joining you. I think that company is doing wonderful R&D technology. Essentially, it is converting all the agri-related, produce, taking the feedstock from the agri and converting it into energy. Essentially, all the sun's energy is captured either directly by the modules or it is captured by the plants. And if you can convert that back into electricity that we can use, then that is a wonderful trend. And this is the circular economy that we are talking about, or the renewable sustainable economy. And I think Praj has wonderful technologies up its sleeves, whether it is in terms of bioplastics, whether it is biobitumen, converting second generation ethanol technologies. Most of the people tend to think of Praj as a sugar molasses based ethanol, first generation ethanol company, but that is only the beginning. There are many other technologies up the sleeve of the company, and they are going to ride each subsequent waves. Biofuels in the overall scheme of things is also a large portion. The shift towards renewables is not limited to solar, not limited to wind. It is going to be everything. Solar, wind, biofuels, whichever technology can come in. So from the next 10-20 years point of view, again, what I'm saying is for a country like India, it makes all the sense to convert its agri-produce and the farm residue into energy. And that is the technology that Praj has mastered.
Okay, in fact, the management has said, in their press release that energy transition and climate action agenda has opened new opportunities for the engineering business for them. And they're also looking to expand their mobility solutions business, not just in India, but globally as well. So got that. That's on Praj Industries. And of course, we will be having a chat with the management very soon. So do keep your ears and eyes peeled for that one. Ravi, hi, good morning. Where else do you have your sights set? I mean, this earnings season was pretty good for many sectors, whether you look at the home improvement theme, whether you look at something like tire makers, and it's been a more margin-related beat that we saw this time. But stock-wise, where do your preferences lie?
So we have been bullish on 2-3 themes. One is the financials, second is the industrials, and within industrials, small equipment manufacturing as well as large capital goods. And these are the companies that are coming out with good quarterly results, as well as their order books are very healthy at this point of time. So if you know that the last big capex boom that we had in this country was from 2003 to 2008. And after that, we've been in like a 10-12 year kind of a lull where the capital cycle has just not picked up. Government has been trying to push the capex cycle for the last 4-5 years. However, the private capex has not joined in. Now, I think going forward, the private cycle capex will also join in, and the states are also likely to join into the party. So the capex cycle will only accelerate from here. And however, some of the companies are factoring in some of the future. So you have to be a little careful about your entry point. But I still believe that we are still at the beginning of the cycle. So if you have a 3-4-5 year outlook, you're unlikely to make a mistake over here.
All right. Hi, Ravi. Good morning. I recall the last time we joined, you had spoken about Ami Organics with all due disclosures, and you had given us your logic as well. And that one delivered finally, actually, after a few quarters of disappointing. So I'm hoping you'll share a couple of names as well. But let's focus on the IT companies. You also said that you're underweight out there, but you like some IT platform companies. Explain this to us. How do you approach this IT space?
No, so clearly, if you are bullish on the IT space in India, see, IT services is a very mature industry. If IT spends are growing at 4%, 5%, India is probably going to grow at 7-8%. And the Indian companies, the leaders, will probably grow at 10-12%. 10-12% is a respectable growth for the. I'm not saying it's a bad growth or anything at that size and scale. But 10-12%, and if on top of that, if there is margin compression, then the profit growth is likely to be on the lower side than on the higher side. So post-COVID, there was a large benefit of work from home, travel costs being not there. So the margins expanded tremendously for the IT services company. Now, and then later on, the attrition set in. So the travel costs are back, attrition is back, and that put pressure on the margin. So that margin pressure is playing out. Now, today, there is some cloud, literally, I mean, no pun intended, but there is a cloud on the demand scenario for IT companies from US because of the kind of interest rate rise we have seen in US. That is going to lead to some amount of demand destruction. It is already beginning to show in consumer. It will probably show up in the banks and financials as well because there are issues in the US banks. So one needs to be a little cautious on the IT services front. And the kind of growth that we are talking about don't really excite us. And a 10-12% grower cannot be valued at 25 times is the simple contention over here. So we'll wait for a time when the risk reward becomes a little more attractive. While on the other hand, IT platform companies are not so much dependent on the IT spends. So everybody is aware of the kind of startup boom that we are seeing. We have seen in the last 7, 8 years. However, there's a funding winter going on over there also. So the lot of startups are going to kind of fall by the wayside. And the ones that survive, or the platform companies that have reached a size and scale which can sustain on its own, the cash flows can sustain its growth, will turn out a big winner. Every time there's a crisis, there is a loser as well as there's a winner. And this time around, the losers are going to be companies that cannot throw cash to survive for the next 12, 18 months. There is going to be a lot of casualty, and that is going to lead to the market share moving towards the established platform players. And that is what we are talking about. So, but having said that, there is no rush to go and buy today. It's something to keep an eye on from the next 6-12 months point of view. We are starting to take our initial positions. We are not in a hurry to build up our full positions yet.
Ravi, I just have one question. Just to go back to that entire renewables area, right? Because this is also a place where we don't know what will finally be the lead technology, even batteries, for example. It's all evolving. And while it's also true that it's unlikely that there'll be one technology which will do well and everything else will fall back, perhaps it'll be a combination of many things. But for retail investors, what's the best way to get exposure? I mean, who can't keep track of, a change in technologies? You're a savvy investor. You track the space closely. Or you think, things like Praj and, others in the space can give you that uninterrupted returns for a long period of time. They will grow, and these are established technologies now. Go on.
See, you are absolutely right, Prashant. It is very difficult to take a call on which technology will survive, which technology will fall by the wayside. And doesn't matter how savvy you are, that is a risk that you need to constantly monitor. I think the savviness lies in understanding what are the trends that are playing out. And see, we take a rolling 3 to 5 year view. The next 3 to 5 years view are looking good. And finally, want to align with managements that can foresee these trends and can go from technology to technology, can understand the way the tectonic plates are shifting and which way you should be aligning. You will not be able to take that call. You might as well align with a visionary management. And from that point of view, I can say, for example, Praj has been working on these technologies for almost more than a decade. And it's a misunderstood or a less understood fact that Praj is actually an R&D company and not a engineering company, which many people believe. Cumulatively, they would have spent more than 300 crores on R&D over the last 10 years. So the point is that most of these companies which are at the cusp of these trends are the ones that are actually inventing the technology or improving the technology substantially on the cost front, on the efficiency front. And those are the ones that you should be betting on. However, as I said, keep a rolling 3 to 5 years view. There is no way to say which technology will finally evolve. But overall, from the energy transition point of view, I can say that this is an all hands on deck approach. It is for the next 10 years. It's not going to be one technology versus other. All the technologies will move forward at the varying pace. And then over a period of time, it will be revealed that, okay, this technology is far superior in terms of cost benefit, in terms of economics. And this is the one that is getting regulatory support. Those are the ones that will survive and accelerate. So today, there is support to solar. There is support to biofuels. There is support, reducing support to electronic vehicles, batteries. So you can pick and choose, and you will get your cues from which way the regulations are headed. If government is reducing its support on, let's say, e-two-wheeler the subsidies, then you know that the pace of penetration is probably going to drop over here unless the government changes its stance again. So go with the flow. Focus on entrepreneurs that are riding this trend terms of technology and which way the regulation is going.
Okay. All right, Ravi, always good hearing your thoughts. Thanks so much for joining in and filling us in with all of those thoughts. Wishing you a good Friday, and we look forward to hearing your thoughts rather soon.